Good. Welcome, everyone. Thanks so much for joining us today. My name is Mona Barra-Gibson, and I work in the Alameda County Assessor's Office. I am the director of the Public Relations Unit here in the office. Really happy to bring this webinar to you today from Assessor Law. I just want to start with a little bit of housekeeping before we get into the presentation. And the first thing you'll hear from me and from the assessor today is a disclaimer. So today's information today is about general information only. Please make sure to consult with your CPA, attorney to get legal and tax advice on a lot of these items. We'll be sharing general information along with what we don't know about Prop 19 right now. Also, thanks to everyone who submitted questions in advance. We really appreciated that and tried to incorporate as many of those questions into this slide deck that you're going to see today. We also have a Q&A function that you'll see. We don't have a chat function for this webinar, but we've got Q&A. So after Assessor Law goes through the presentation, we'll also be going to Q&A questions so that he can answer them live. If you have any other questions, you can still email us and we'll try to incorporate them as well. But given that we're on a short timeline today, that's how we're going to do the Q&A. And with that, I will hand it over to Assessor Law.
Thank you very much, Mona, and good afternoon, everyone. Thank you for joining us today. Our office has been inundated with phone calls about Proposition 19 and what does it mean to individuals who own property in Alameda County. Now, I'm going to give a couple of disclaimers to start off with. The first and foremost being that this is for information purposes only, that this does not constitute legal advice. That is not a substitute for getting good legal advice. And I would highly encourage all of you to talk to your attorney, your CPA, your accountant. There's a lot of tax implications and a lot of legal implications that come with Prop 19. Anyone who reviews this information should not rely upon it or act on it in any manner without first engaging in said professionals within those areas. The other thing I want to say is that because we've been inundated with questions, we created this webinar in hopes that it will answer a lot of your questions all at once. I'm going to be posting these slides after we're done on our website. If you go to our website, probably by tomorrow, under the Prop 19 tab, you'll see these slides. And hopefully you find it helpful to answer any questions about Prop 19 that you may have. All right, so what happened here? There was an election in November of 2020, a month ago, a little month and a half ago. There were two ballot initiatives in that election that relate to property taxes. Proposition 15, which required reassessing commercial and industrial properties every 3 years, did not pass. Proposition 19, which actually has two components in it, changes the way in which we can transfer our base values and changes the rules for parent-child transfers. That did pass. That passed by a slim margin of 51% in favor, 49% opposed. So the first question we get all the time is, who created this law? Well, you did. The voters did. The voters in California decided on this, voted on it, and so it's become the law of the land. Whether I, as the assessor, or my staff agree or disagree with the law is irrelevant. We're obligated to enforce the law the way it's written and instructed to us by you, the voters. Like I said, Proposition 19 has two main components to it. The first is the base value transfer for people 55 years and older, victims of government-declared fire disasters and disabled individuals. The second component, which is where a lot of the questions are lately, are the parent-child transfer exclusions for primary homes and investment properties. In order to understand what Prop 19 did, you have to understand what Prop 13 did back in 1978, when the voters in California passed Proposition 13, which limited the increase in property taxes that you can face. So let's talk about Prop 13 first and what the current law is prior to the implementation of Proposition 19 next year. So Prop 13 can be easily summarized in an example. It gives property tax benefits for long-term ownership. The longer you own the house, the more you save in property taxes. So here's the scenario. My mom and dad bought a house in Union City for $100,000 My mom and dad bought a house in Union City in 1980 for $100,000. They're assessed at $100,000 in 1980, and they pay about $1,250 in property taxes in 1980. The property today is worth about $1 million, but the property is assessed at about $200,000. Prop 13 caps the increase in the property tax assessment each year to 2%. So if you increase the property taxes by 2% a year, compounded each year, the current property taxes in 2020 for my parents on that house is about $2,500. It does not matter whether they live in the house or they rent it out. Prop 13 keeps the property taxes at that value. What does it do to new owners? If someone buys that exact same house that my parents bought in 1980, and they pay market value for it, they pay $1 million for it in 2020, they are assessed at $1 million, and their property taxes will be about $12,500. Proposition 13 restricts the assessment increase to 2% a year, and it caps the total property taxes to 1% of the assessed value. In addition to that 1%, you have special assessments such as school bonds, vector control, that you, the voters, vote on. You guys decide to increase your property taxes with these special assessments when it shows up on the ballot. So it comes out on average to about 1.25% each year for property taxes. I said Prop 19 has two main components. It deals with base value transfers and parent-child exclusions. I want to talk about the parent-child exclusion part first, and we're going to talk about parent-child under the current law, under the current Prop 13 law, before Prop 19 takes effect. Prop 13 had two more initiatives that added to it. In 1986 and 1996, it allowed for parents and grandparents, respectively, to pass on their property without the property being reassessed, with some limitations. What transfers are excluded under the current law before Prop 19? If you, the parent, transfer your primary residence to your child, they get to keep your property tax basis, irregardless of the value of that house. You can transfer up to $1 million of rental property. That's $1 million of assessed value of rental property to your child and not get reassessed. We're going to go over some examples in a few minutes. What value of transfer property is counted? Prop 13 looks at the factored base year value, which is your assessed value on the property, irregardless of what the market value is. We're looking at what the assessed value is. Who can qualify? Children. Children means stepchild, son or daughter-in-law, adopted children, or grandchildren if the parents have passed away. So if you're a grandparent and the parents of your grandchildren have passed away, meaning your children have passed away, your grandchild can take the property and keep your low property tax basis. So here's the example. Going back to the house that my mom and dad bought in 1980 for $100,000. They're assessed at $100,000. They paid $1,250 in property taxes in 1980. Property is worth $1 million today in 2020. The current assessed value, with the 2% increases every year since 1980, come to about $200,000. That's a rough value. My parents give me that house, free and clear. I file a claim for reassessment exclusion between parent and child, which means my parents gave me the house. I notify the county assessor. There's a form that you are required to fill out if you're the child. And we do not know if you are the child until you tell us you're their child. So it's incumbent upon you to let us know. You fill out the form, you send it into our office, we approve the transfer between parent and child. You get to keep, or I get to keep, the $200,000 low property tax basis. That form, under current law, needs to be filed within 3 years. Now, all that changes with Prop 19. So if this is done properly before February 15th, we're going to talk about the deadline soon, because there's a lot of government holidays around that deadline. If it's done before, and I take the house from my mom and dad, I get to keep the low property taxes at $2,500 a year. Otherwise, afterwards, if I take the property is reassessed depending on whether it falls under a certain exclusion or not. If it does not meet any of the exclusions that we're going to talk about, it gets reassessed to the full market value of $1 million, and the property taxes increase to $12,500 a year. That's a $10,000 difference in property taxes each year. So we'll go over the examples in a minute. For rental properties under current law, there's $1 million assessed value threshold, or excuse me, cap, not threshold. In the prior example, my mom and dad's house is assessed currently at $200,000. That means they can transfer up to 5 of those houses to me, and I can keep the low property tax basis. The child must timely file for the claim for exclusion. I'm going to repeat that. The child must file the form with the assessor's office. We don't know if you are a child of a child or not until you tell us. If you don't tell us, you will be reassessed. Again, I'm going to repeat, you need to talk to your CPA or tax attorney about any possible capital gains issues. That we're going to briefly talk about the step up provisions. That is federal tax issue. It is not a property matter, but I'm going to talk about it real briefly in a future slide. But I'm going to advise you to go talk to your CPA or tax attorney about that possible implication if you decide to transfer property. Trusts and wills. Well, trusts are very complicated documents. We will review the entire trust document to determine whether there is a change in ownership. The change in ownership can also be a change in beneficiaries. Talk to your lawyer about it. They're very complicated instruments. You need to make sure you get good advice about it. The transfer of properties when it comes to LLCs is also very different. We're going to talk about Prop 19 and what it means if you own your primary home in an LLC, but it's important for you to know now that an LLC is not entitled to a homeowner's exemption, which is key to Prop 19. All right, Prop 19 has 2 main components, like I said. We're going to talk about the first one, which is the base value transfer, right? What are the scenarios in which a base value transfer can occur now for those who are 55 and older? Current law. Base value transfers, otherwise known as Proposition 60 and Proposition 90, allow you to take your low property tax bases with you when you buy another house in the same county or within 10 select counties, assuming you meet certain criteria. And the first of which is that the value of the home in which you acquire, the market value of the home in which you acquire, is the same or less than the market value of the home you sell. We're going to go over an example of that if you didn't understand what I said. So what does that mean? We're looking at the market value, not the size of the home when we talk about downsizing. So a husband or wife buy a home in Alameda in 1980 for $200,000. The assessed value of that home today is about $400,000. Remember, it's 2% a year of increase for the last 20 years. The property taxes are about $5,000 a year, roughly. The house itself today is worth $1.2 million. Husband and wife decide to sell the house in Alameda and buy a home in Livermore to be closer to their daughter. The house they buy in Livermore is $700,000. When they move to the house in Livermore from Alameda, they'll apply for a base value transfer, and they'll fill out the form and send it into the assessor's office, our office. They will be able to take with them their $400,000 assessed value to their $700,000 house and keep paying just $5,000 a year in property taxes. They can do the exact same thing within the 10 different counties that all participate in Prop 90. In this example, instead of going to Livermore, they move to Los Angeles, which is part of the 10 counties that are participating in the transfer. They get to keep their $400,000 lower assessment, even though they bought a $700,000 house in the city of Los Angeles. They would file the base value transfer form with the assessor in Los Angeles County to keep the basis. And we're talking about property tax basis, all right? We're talking about property taxes in this situation, not federal income taxes. In order to qualify for the Prop 60 or 90 to move within the county or outside the county in the 10 other counties, you have to complete the sale and purchase within 2 years. So if you sell your house first, you have 2 years to buy the house, the replacement house, and transfer the basis. The clock starts once you sell the house, or you can flip it and buy the replacement house first and then sell your house afterwards. Either way, it starts with the first transaction. You only get the benefit, and the exclusion is applied to, the base value transfer is applied to you after both phases are complete. The market value of the home purchase must be the same or less than the market value of the home sold. Now, there are some limited exceptions to that. I'm not going to get into too much detail, but there's some very limited exceptions depending on the date. This could also be with new homes constructed as well. So Prop 19, what does it do? And when does it take effect? Well, the title of Prop 19 is the Home Protection for Seniors, Severely Disabled, Families, and Victims of Wildfires or Natural Disasters. Now, that's part of what Prop 19 does. The title doesn't include the entirety of what Prop 19 does, because Prop 19, as I said, also affects parent-child transfers, which is not included in the title. Parent-child transfer portion takes effect starting February 16th of 2021. So it takes effect in less than 2 months. The base value transfer changes takes effect on April 1 of 2021. So you have about 3.5 months, a little less, for that portion of Prop 19. Base value transfers, we're going to start with that under Prop 19 because that's the easier part. And we get fewer questions about base value transfers. Well, I told you the current law prior to April 1 and prior to the implementation of this portion of Prop 19 only allows the transfer within 10 select counties. Prop 19 will change that and allow the transfer to the entire state. So you can buy and sell in any of the counties in California and take your bases with you as long as you're 55 or older, or severely disabled, or a victim of a wildfire, of a government or declared wildfire. The replacement property, I said earlier, under Prop 13 and the current law, has to be at the same value or less. Prop 19 changes that portion and allows you to buy a property which has a higher market value as well. And there's an equation to determine what the new property taxes will be when you buy a higher market value home. You're also allowed to do it 3 times under Prop 19, whereas the current law only allows you to do it once in a lifetime. As I mentioned, the replacement property can be of higher market value, and there's an equation to determine what the new property taxes will be when the market value is higher. We have some examples in the next slide. So this is the same example as before, right? Husband and wife own a home in Alameda. They bought it in 1980 for $200,000. The assessed value is $400,000. The property taxes are $5,000 a year currently. The house is worth $1.2 million. They sell the house in Alameda and they buy a house anywhere in the state at this point. Like after April 1, they buy anywhere in the state. They buy a house for $700,000. They get to keep their $400,000, low property tax basis. Here's a graph showing the example I just said. First part has a market value of 1.2 million, a assessed value of 400,000. They buy the replacement house for 700,000. They keep their $400,000 lower assessed value. They save about $3,700 a year in property taxes in keeping their assessed value rather than getting reassessed at 700,000. Sorry, that was Siri. My phone just turned on, which is kind of freaky. Upsizing. So what does Prop 19 do that's different than what the law currently allows for? Well, Prop 19 allows you to buy a more expensive home if you're 55 and older and keep a portion of your lower property tax basis. So the property tax increase won't be to full market value, but it won't be at the same low value that you currently have. So similar example, husband and wife buy a property in 1980 in Alameda for 200,000. The assessed value is 400,000. Property taxes are about 5,000 a year. House is worth 1.2 million. After April 1, they sell the house in Alameda and they buy a house in San Diego to be closer to their daughter. They spend $1.7 million for the house in San Diego. What is their new property taxes? Well, their new property taxes will be based on a $900,000 assessment, which means they'll pay about $11,250 in property taxes. How did I get $900,000? The new property assessment is based on first, what the assessed value of the current home is, 400,000, plus the difference between the market value of the new home and the home sold. The difference being $500,000, 1.7 to 1.2. So you add the current assessed value to the difference, you get $900,000. $900,000 in assessed value versus 1.7 million if they were to get reassessed and didn't qualify. Savings about $10,000 a year in property taxes. Again, I'm going to post this slide on our website in case you want to go over it again if you didn't quite understand the example. So that's what it does for base value transfers. What does it do for parent-child transfers? And this is where the majority of the questions come into our office. Starting February 16th, 2021, in less than 2 months, the exclusions for parent-child transfers change. In order to qualify for a parent-child transfer, the home must be the primary residence of the parent and become the primary residence of the child that's accepting the property. There's also a cap of $1 million plus the assessed value. We're going to go over an example in a few minutes about what that means. How do you determine the property taxes after the transfer in the event the homes are worth more than $1 million? The child must also file for the homeowner's exemption within 1 year of the transfer. That's a new change as well. After February 15th of 2021, transfers of non-primary homes, meaning transfers of rental properties, commercial properties, vacation homes, cabins, will be reassessed. So what does Prop 19 do for parent-child transfers? Well, it eliminates a lot of things. It means any residential property that you transfer to your child will be reassessed to market value. Any commercial property, rental property, will be reassessed to market value. Any industrial rental properties will be reassessed once you transfer it to your child. And any vacation homes, cabins will be reassessed when you transfer it to your child. Those exclusions no longer apply after February 15th. What still does apply but has been changed is the primary home exception to the transfer rules. You are a parent, you transfer your primary home, the home that you're living in, that you have a homeowner's exemption on, to your child. that child must occupy that home as their primary home, meaning they must file for a homeowner's exemption after the transfer within 1 year. There will be no change in reassessment as long as the market value is less than the assessed value plus $1 million. That's a lot to understand. I'm going to go over an example of that point in a minute. So you'll see it with numbers. Now, we're going to talk about what the actual deadlines are, because you need to know that this takes effect on February 16th. However, February 15th and February 12th, the Friday and the Monday before February 16th, are county holidays, which means all the county offices will be closed, which means county offices are closed the 12th, 13th, 14th, and 15th. The recorder, where you record all your deeds, is also closed all those dates. And they do not allow walk-in recordings because of COVID. We're going to talk about what those issues mean to you and to the title companies in a future slide in a little bit. All right, example. We'll go back to my mom and dad's house in Union City that they bought for $100,000 in 1980. Current market value is $1 million. It's currently worth $1 million. It's assessed at $200,000. Because the market value is less than the total of the assessed value plus 1 million, my parents can give me that house after February 15th, and I would still be able to keep the $200,000 assessed value as long as it is their primary home, which means before the transfer, they live there and they have a homeowner's exemption on it. And after the transfer, I move in, I live there, and I take a homeowner's exemption on it. Then I get to keep their $200,000 assessed value, saving me a lot of money in property taxes. Example 2, what happens if the house is worth more than the assessed value plus $1 million? So another similar example, mom and dad buy a house in Piedmont for $100,000 in 1980. The property is now worth $2 million today. The property is currently assessed at $200,000. Like I said, it's 2% a year compounded. My parents give me the house after February 15th. What are my new assessed values and property taxes? Well, the new assessed value will be $1 million in this situation, rather than the higher market value of $2 million, but it's more than their $200,000 current assessment. Why is that? Well, let's go over the details of why that's the case. In example 1, I was able to keep the $200,000 low assessed value. In example 2, it bumps up to $1 million. $200,000 assessed value from the previous slide. So the reassessment occurs because the market value of the home is more than the current assessed value plus 1 million, right? Current assessed value plus 1 million is 1.2 million. The market value of the home is $2 million. There's a difference of $800,000 there. That $800,000 is added on to the current assessed value of $200,000, thus giving us a new assessed value of $1 million. So the new property tax amount ends up being about $12,500 rather than the $2,500 that my parents had, but lower than the market value assessment, which would have been $25,000 a year in property taxes. Again, the transferee, the child in this situation, must reside in the principal residence within 1 year of transfer and must file for a homeowner's exemption within that 1 year. This new law takes effect starting February 16th. So same example, just to chart out what the property tax differences are. My parents keep the house, right? They keep paying the low property taxes at $2,500. My parents transfer the house to me prior to February 15th. Either house, the Union City example or Piedmont example, I get to keep the $2,500 property tax amount. My parents transfer the house to me, the Piedmont house to me, after February 15th and I move in, my property taxes go up to $12,500 a year. If my parents use the Piedmont house as a rental property and then transfer it to me after February 15th, property taxes go up to $25,000 a year. Again, I will repeat, talk to your attorney about legal issues, talk to your CPA accountant, tax attorneys about tax issues. We get a lot of questions about the step-up provisions and capital gains tax if there's a transfer of the property. Now, there are a couple of issues when people decide whether to transfer their property or not. And you need to talk to your attorney, your accountant, and your children about it. You need to have the discussion with everyone to decide what's best for you and your family. Because when you transfer property, you end up losing control. When you transfer property to your children, there are issues potentially down the line if they end up getting divorced, or they get a lawsuit, or they file for bankruptcy. You potentially lose rental income if it's your rental property you're transferring. What happens if your child dies before you do, right? Before Prop 19, the parent-child exclusions go both ways. A child can give a property to their parents can give a property to them. After Prop 19, we don't know if a child can still give property to their parents. That was not made clear in the law. And we're waiting to see if the state is going to clarify certain provisions of the law. So what does your basis mean in capital gains? And again, talk to your CPA and accountant about it, right? Capital gains is a federal tax issue. Our office deals with state property taxes. But we understand that federal taxes affect your decision-making. So you need to be made aware there is a potential issue with capital gains tax, right? If you don't know what a basis is, you definitely need to talk to your CPA and accountant, right? Your basis is your purchase price plus any improvements you make minus any depreciation, right? The difference between the sales price and your basis is taxable gain. And capital gains tax rates change quite regularly. So you need to make sure you understand it all, right? And there's a adjusted basis if you were to pass the property on by inheritance to your children after you pass away. So there are benefits and losses depending on what your situation is, and you need to talk to a professional about it. And don't ask us about capital gains. We're going to tell you that we can't answer those questions. Things to be concerned about, right? And the reason why I tell people to always talk to their family and their legal professional and their CPAs and accountants is because you don't know what the kids want to do with the property. Are they going to sell it right after you transfer it to them? Or are they going to keep it for the next 50 years? Right? The situation is different and your plans may be different depending on what your kids plan for the property. It's an issue of property tax savings versus capital gain savings. And Prop 19 may or may not affect you depending on what your family situation is. So seek out an attorney who knows these issues. Speak to your CPA and accountant and tax attorneys who knows the tax implications when you're making these decisions. What we don't know, and there's still a lot that we don't know about Prop 19. The law was written in a way that left a lot of questions for us as assessors. And so for those who don't know how this works, the state, you the voters, passed this law. There are a lot of issues that were not addressed in the law. So the state legislature and the state board of equalization makes determinations for the assessor. They give us guidance on what they think it means. They don't always give us guidance on everything. Any portion of the law that they don't give us guidance on, each of the 58 separate assessors then makes a determination within our respective counties about what the rules will be. So I'm going to wait to see if the state gives me any guidance. Any area where they don't give me guidance, I'm going to seek out advice. And some of you on this webinar will be people who I seek advice from about how my office should move forward on some of these issues and answer some of these questions. The questions that you see in the next few slides are questions that I have about Prop 19. And if the state doesn't give me answers, I'm going to make up these rules. And I'm sure some of you have very strong opinions about what some of these rules should be. So I'm all ears. And once I make up these rules, I'm going to post them on our website. And understand that these are the rules for Alameda County, and that each assessor in each county will have the authority to make up the rules for their county. So each county might have different rules if the state doesn't tell us. So what happens in a base value transfer if you sell one property before April 1 and buy the replacement property after? We don't know yet. We don't know if properties are transferred or grandfathered in. I have a general idea of what I think it should be in the event the state doesn't tell us, but I'm going to hold off on saying that because the state might come down with a rule that's different than what I think it should be before April 1 when the new base value transfer rules take effect. Will counties track the 3-time limit? We don't know yet. I'm guessing the state will track it because right now the state tells us when a parent has reached the $1 million cap in assessed value when transferring property to their children. So the state tells us that, and then once the state tells us you've reached your limit and they track it by social security number, we start reassessing properties that are over that limit. For second or third time transfers, will the original residence be the last residence purchase? We don't know if it's your first house, your second, or your third time of transfer that we should use the base value for. I'm sure most of you will want us to use the first one because that's probably going to be the lowest. And that's my inclination as well, but we're going to wait for the state. Can a parent transfer consecutive properties? So you transfer one of your primary residence to your child, to your first child. You move into another house because you gave that house to your first child. Can you transfer that second house to your second child and have the second child keep a low tax base? We don't know. We're waiting for answers. The guess would be the state will come down and say that's likely, but like I said, we don't know until they tell us. I'm sure some of you have opinions. I have an opinion about it already. Multiple children, we don't know if all of your children have to move into that house. If you give it to, if you have a house, you have 3 kids, you give the house to all 3 kids in the deed rather than giving it to just one. Does all 3 have to move in? We don't know. How long do they have to live in that house to retain the low basis? Again, the assessors, all 58 of us have talked about it. Some of us feel it should be 1 day. Some of us feel it should be indefinitely and that they lose it when they move out. Like I said, we all have different opinions about it. If the state doesn't come down with an answer, each of the 58 counties will have a different timeline. Can different children live in the principal residence? You give it to 3 children, 1 child lives there first, moves out, and the second child moves in. It's a great question. We don't know the answer to that yet either. How will counties determine homeowners exemption is valid? It is a form that you fill out under penalty of perjury that you're living there. That is your primary home. The state tracks it. So if you have more than 1 homeowner's exemption, your homeowner's exemption request will be denied. So make sure that you only have 1 homeowner's exemption filed at a time. Will the state track parent-child transfers of principal residences? I hope so. I hope that's going to be a state responsibility, not an assessor responsibility. I can't see the bottom question on my slide. Can children transfer to their parents? Under current law, they can. Under Prop 19, we don't know. So here's my caution for all of you, especially the title companies that are on this webinar. The county recorder is closed on Friday, February 12th and closed on Monday, February 15th. The State Board of Equalization has already told the assessors starting February 16th, Prop 19 takes full effect, which means there's no extension because of the government holiday. February 16th, it starts. The county recorder is a separate agency from the county assessor. I know that in some counties, in half the counties in the state, the assessor and the recorder are the same person. In Alameda County, I am only the assessor. I am not the recorder. The recorder is a separately elected person. The assessor in my office will use the recording date to determine if you met the deadline for Prop 15. We do not use the signature date on the deed. I don't care when you signed it. It is the recording date. We do not see the envelope, so we will not know what the postmark date is. What happens is when you record a document, if you mail it into the recorder, they will open up your envelope, throw away your envelope, record your document, scan it in, and send it to us. So we never see when you mailed it. The law requires that we use the recording date, not the signature date. So if you sign it on January 15th, but don't record it until March 15th, you're out of luck. The recorder is currently backlogged, which means if you mail it in for mail-in recordings, if you mail in your documents on February 1st, they're backlogged about a month right now. So it will not get recorded till about March 1. And if we're using the recording date, you're out of luck, because it will be after the deadline and the start of Prop 19. So if you're going to do this, there are a couple of things that we suggest, right? Drop off documents, they don't allow walk-ins, but they do have a drop-off bin. If you do drop it off well in advance. It may or may not get recorded the same day, depending on how many documents there are. If everyone rushes on February 11th and drops off tons of documents, they're not going to have the staff to record it all on that day. And because they're closed on Friday, Saturday, Sunday, and Monday, and on that Tuesday, Prop 19 takes effect, your document might not get recorded prior to February 16th. So if you're going to do this, get it done soon. Electronic recording is usually recorded the same day. So for the title companies who do electronic recording, thank you. Electronic recording is the best way to do it. Electronic recording also gives you an electronic signature of when it was done. And I say usually done the same day because we asked the deputy recorder and they said, unless they're swamped, it will get done the same day. Otherwise, it might take another day or so. So again, the same caution. Don't wait till the last day because it might not get recorded in time. The recorder's office does not allow walk-in recordings because of COVID. So you will not be able to drive to Oakland and record the document on the same day. Remember, this is Alameda County's rules. Every county is different, and you're gonna have to call the recorder in the county that you own property in if you're not in Alameda County to see what their deadlines are and what their rules are. Common questions before I go into your Q&As. These are questions that we get phone calls on a lot. And remember, if you're going to call my office, be patient. We get a ton of phone calls, and we only have 8 people answering the phones. So you're going to be on hold for a while. My staff is told to do their best to answer the question, but there are a lot of questions that we just simply cannot answer because you're asking for legal advice or you're asking for tax advice, but we can't answer those questions. So the first common question that we can answer, do both spouses have to be 55 or older to qualify for a base value transfer? No, only one spouse has to be 55 or older. As long as one of you is 55 or older, you qualify. What if my house is in an LLC? And there are a lot of people who own homes, their primary home in an LLC. If it is in an LLC, you do not qualify for the homeowner's exemption, which means even if it's your primary home and you pass it on to your child, you will not be able to pass on their low property tax bases because you can't file a homeowner's exemption on an LLC. And we use the homeowner's exemption to determine if it's your primary home or not. Also, remember that an LLC is reassessed when there's a change in control. So you don't have to sell the LLC to have a reassessment. All there has to be is a change in control for there to be a reassessment. If you don't understand that, talk to a lawyer. They'll explain it to you. Is the parent-child exclusion automatic? No. It is your duty and your responsibility to let us know when there's a transfer between parents and children. We're not mind readers. I don't know if someone's your child or not. I don't care if they have the same name as you, right? It could be a sibling, could be a grandchild. We need you to tell us. If you don't tell us and all we see is a transfer, you will be reassessed. It is your duty to let us know. And it's a very simple form. And after Prop 19 takes effect, if you transfer it to your child, remember, they got 1 year to file for the homeowner's exemption. And that's a hard deadline. How does Prop 19 affect second homes and vacation homes? After February 15th, on February 16th, any transfer of a second home, a vacation home, gets reassessed. The only exclusion after February 16th is for your primary home, and it has to be the primary home of your child after the transfer. Next question is about step-up basis. Again, that's a federal tax issue dealing with capital gains. You need to talk to your CPA and your accountant about that. I know that there are issues you have to think about. And that's why I always tell people, talk to your family, talk to your children, talk to your CPA about what all that means and what their plans are, right? If you transfer the home to your child and they sell it right away, there's some potential capital gains issues right there if they don't keep the home, right? Like I said before, it's a difference between property tax savings and capital gain savings. And you have to decide what's best for you and your children. What is the impact of property owner transfer, current rental property? Again, any type of a property that's not a primary home will be reassessed starting February 16th upon transfer. Again, I didn't make up the rule. I sold my house in August 2020, have not purchased replacement home yet. If I wait until April, will I be able to buy the replacement home at the higher value? We don't know. We're waiting for the state to give us guidance. If the state does not give us guidance, you need to ask the assessor in the county in which you buy the replacement home in, right? Whatever rule I formulate for Alameda County applies only to Alameda County. Whatever rule the assessor in the other counties form for their county will apply in their county. In July 2019, I bought a primary residence in Contra Costa County. I sold my Berkeley home in October 2019. No, it doesn't. So if you, before April 1, 2021, if you try and apply for a base value transfer, it has to be either within the county or within the 10 counties that allow for the base value transfer. Contra Costa County is not one of the counties that allows for the base value transfer, unfortunately, for those in Contra Costa County. Once Prop 19 is in effect, may a California homeowner transfer their tax base from their current primary residence they plan to sell to the existing property they already own and will become the new primary residence? No. It only transfers to new purchases. It is not property that you already own. What will be the birth date to be eligible for age 15? It's when the first step occurs. So either when you buy or sell that first property to be transferred, that is when the calendar date starts, and you have to be 55 or older at that point. What, if any, changes will Prop 19 bring to the assessed value of property should a parent or child wish to name a child or grandchild to the title of real property during the lifetime of the grandparent or grandchild? It depends whether that property is your primary home or your investment property. Adding your child or grandchild to your investment property after February 15th, will trigger a reassessment for the portion of the property that you transfer to your child or grandchild. If it is your primary home and you add their name to title and they fit under the exclusion, the dollar amount exclusion, then it will not change the property tax amount. Other than the 2% increase each year. How is primary residence established for a child property tax transfer exclusion, and how long does the child need to live in a home? Again, we don't know how long the child needs to live in the home in order for the exclusion to continue to exist. Each assessor will give you a different answer as of today. We hope the state and the Board of Equalization will give us an answer to that first before the assessors are asked to make their own rules within each county for that. What are the property tax ramifications to the child receiving their parents' second home if the parents die? Again, second homes are reassessed after February 15th. On February 16th, any transfer of a second home will trigger a reassessment regardless of whether the child makes it their primary residence or not. It has to be both the parent's primary residence and the child's primary residence as determined by their homeowner's exemption filing. Trust, again, I'm going to repeat, go talk to your attorney if you have properties in a trust. We review trust documents very carefully to determine whether there's a reassessment or not. Typically, we treat a change in beneficiaries as a change in ownerships, and that triggers a reassessment. If you don't know, if you don't understand what I just said, talk to a lawyer. It's very important that that is explained to you well, and you understand that as you create your trust documents. My office will not answer any specific questions about your trust. We do not review your trust beforehand, just like we do not appraise your property before you buy or sell it. It is not what we do. It is up to you to consult with your lawyer about it. Talking about lawyers. Because we get so many questions asked of us that are legal in nature that we cannot answer, I created a legal clinic with the assistance of the Alameda County Bar Association, Legal Access Alameda, the County Law Library, and the County Library System. We have a free legal clinic for people who have questions about transfers. It is every third Thursday and Friday of each month. You can sign up for an appointment to talk to a lawyer. It fills up very fast. So make your appointments if you have questions and you need to talk to someone about it. Don't call us, because we're going to tell you we can't answer the question if it's a legal question. Here is my generic office email address. Again, we will not answer specific questions. You'll get a response that says we can't answer it. I'm not going to give out my personal email address because I already get about 100 emails a day that I don't have time to respond to all of them. This is also our website right there. We're going to post these slides onto our website sometime either later today or tomorrow. So you can go over the slides again if you have any questions. Be patient. Give us a little bit of time to get everything up. But we also have some generic information on our website about Prop 19 and other tax-related matters. Hopefully, the website will answer all your questions before you have to call or email us. With that said, I'm going to go into some of the questions in the Q&A session. I know there are quite a few of them. I see them popping up. I'm going to do my best to answer those questions. Let me go backwards. And we'll start with some of the first ones. If you have further questions that weren't answered in the presentation so far, put them in the Q&A session. Our staff is reviewing the questions. They're going to hand it to me. And I might actually start reviewing some of them too on the screen as I'm talking. And we'll try and get to as many of them as we can. First question here from Suzanne. Say I sell my primary residence in January 22 and I qualify for Prop 19. How soon do I have to buy the next California home to transfer the tax base? 2 years, Suzanne. You have 2 years from when you sell your home to apply for a base value transfer. We might move to Hawaii for a couple of years, rent or buy there, then eventually move back to California and buy in Tahoe. Well, I'm jealous, Suzanne. I'd like to move to Hawaii too. You have 2 years from the time you sell. So you got 2 years. Next question from David. Can you address the issue of processing time once paperwork is submitted? We have a property that was transferred and the form submitted, and we're told processing time was at least 6 months. Is that what everyone should expect? With an expected processing time of 6 months, what happens to the additional tax paid since the property was reassessed at sale or transfer? So the processing time is about 6 months before you get a supplemental notice. So you will get a supplemental tax notice after the paperwork is all done. But for Prop 19 and Prop 13, what's important is the document recording date. So even though you don't get your new tax bill for about 6 months, as long as the document was recorded by the deadlines, you'll be okay. That's what matters. the long processing time actually is to your benefit because you're not paying the new property taxes for 6 months. You won't get that bill for a while, so you get to get interest on it with whatever you have invested. But yeah, it sucks. It takes a while. You know, the staff works as hard as they can. We get hundreds of thousands of documents every year that come in that we must process and review. Next question from Kimberly. If date of death is 2020 and non-pro rata distribution passes parents home to one child while other children take equal and offsetting assets occur after February 16, 2021, with the pertinent date of transfer be the death date. No, the date of transfer is the day of the recorded documents. So that was, I'm guessing Kimberly's an attorney, estate planning attorney. We base it on the recorded documents. So it's the recording date. So get those kids in line and get the documents recorded. And it sounds like you're doing a like-kind exchange between the children, with some taking the house and some taking other assets. So the recording date is the most important thing you need to keep in mind. How does Prop 19 work for owner-occupied rental property? Well, if it's owner-occupied, I'm confused how it would be a rental property. The question comes from James. If you want to clarify your question, if it's owner-occupied, it wouldn't be a rental property. Unless it was a duplex in which you're living in one side and renting out the other. We would treat it, we would split the assessment, put a value on the side, if it's a duplex, put a value on the side that is occupied as your primary residence, and that base value will be transferred. The other side will not be part of the calculation as far as what you're allowed to transfer, either as a base value or to your children. And then the rental side of the duplex would be reassessed. So it's a split assessment, if you get what I mean. We split it in terms of the appraisal, and then we add it back together in terms of a final tax bill. Does a revocable trust have to be dissolved before gifting property to children? There's a question from about a revocable trust. Before filing change of ownership with the county. There are tax implications with dissolving a revocable trust. So I'm going to say talk to your CPA and your estate planning attorney about it. So I'm not going to answer that. Can you sell your primary home before April 1st, but buy your replacement home after April 1 to qualify for the base value transfer? That's from Christina. I don't know. We talked about that a couple of times. We're waiting for the state to tell us whether it's permissible or not. And if the state doesn't tell us, each assessor will make that determination. And you're gonna have to ask the assessor in the county in which you're transferring the basis to. Again, I have a general idea of what I'd like to see in Alameda County, but I'm gonna talk to some other people about it, including some of the people on this webinar about what their thoughts are before I formulate a policy for our office. But I'm hoping that the state will give us guidance first. Does transfer exemption apply only to single family residential units? No. Like I said earlier, if it was a duplex, we would treat the duplex, the side of the duplex that you're living in as your primary home and treat it that way. And the question was about a triplex. So same thing as the duplex example. We would look at the portion that you live in. Tammy asked a question, what if it was valued at $1,050,000? I don't understand what your question is, Tammy. If you want to expand on it further in the Q&A, hopefully my staff will pick it up and get me your question again with some further information. Given COVID and the reporter not allowed walk-ins, how can the state not allow an extension of the filing period beyond February 16th? That question is from Elizabeth. Without speaking on behalf of the state, because I'm not the state of California, the deadline was voted by you, the voters. So when you voted on Prop 19, you also voted on the deadline for when Prop 19 will be in effect. I know a lot of people have told me, well, they didn't read the ballot proposition carefully and didn't understand that this is what it does. it's hard for me to say, you know, you should have read it. The voters voted on this. Personally, I didn't support Prop 19. I thought it was not a good change to the laws, but based on the vote, I was in the minority. I personally voted against it, but it passed. So now it's my job to implement it, even though I disagree with it. And again, my guess would be, in order to extend the date, it would have to go back to the voters of California. And I don't think there's going to be a special election prior to February 16th. Kimberly asked, can we indicate signing date as the date of transfer on the P-Corps? No. We are, under the law, we are to take the recording date as the date, and that was written in the law as well. So like I said, I don't make up the law. I'm just charged with implementing it. And if that's what the law says, that's what we have to go by. There are some minor exceptions to the law. I'm not getting into the details of it, but it requires a lot of evidence to show that the recording date was not the actual transfer date. I don't really want to go into it in this webinar because it will take a long time to go into it. One question from Doug. Once parent-child exclusion is granted post February 16th, how does the assessor determine the house remains the primary residence of the child going forward? Homeowner's exemption. The child has to file for the homeowner's exemption, which is a document that's signed under penalty of perjury, that it is their primary home. They also list their social security number on it. So that way the state and our office can track whether someone has more than one exemption. And if they do, will lose their exemption. And if they lose their exemption, the house will be reassessed. I am over 55 and sold. This is a question from Kathy. I'm over 55 and sold our primary home in October 2019 for $850K and ready to buy now. We are entitled to 10% more within 2 years. Yes. Yes, Kathy. That wasn't a question. It looks like you just made a, oh wait, here's the question. Since the housing market is so crazy and expensive, we need to buy it after 4/1/21 for 1.2 million. How does it work? I don't know yet, Kathy. The state will tell us whether you qualify for the upsizing. In that slide, I talked about upsizing and what it means for your new tax basis if you buy a house that's more expensive after April 1. If the state says it's okay, then the assessors will say it's okay. If the state doesn't say anything, then each assessor will make up the rules for a situation like yours, where you sold the house before April 1 and bought the replacement home of a higher value after April 1. I don't know if you would lose your tax basis completely, and it's possible that the state might say you're out of luck and you lose it completely and you get completely reassessed. The Board of Equalization typically will take public input before it makes these rules that they send to the assessors. And I know they have a board meeting in January to decide some of these rules. So if you want to give input, especially in your situation, to the Board of Equalization, you're more than welcome to give them your input. The Board of Equalization is composed of elected members. You choose the members of the board that make these rules. So you're more than welcome to send a message to your elected member of the board. All right, I've got more over here. All right, we still have time, so I'm going to go over some of these. What do you use to determine the market value? Are estimates acceptable? No, estimates are not acceptable. How do we determine the market value of a property? We typically look at comparable sales. That's the first approach. For those of you who are realtors, you took your real estate courses and you know that there are different approaches to determine market value. The first and most common used approach is a sales comparison, right? What other homes sell for that are similar or the same home? The market value of a home that you buy, most of the time, not always, is determined by the price in which you paid for that home, assuming it was a normal arm's length market transaction. We will usually accept the purchase price as the market value. In other situations where it is not a sale and it's a transfer or a gift, we will look for comparable homes. We'll use a comparative approach. And remember, if you disagree with our determination, and I became the assessor because I disagreed with the assessments made by the prior assessor in this office, you're always welcome to let us know that you disagree. You can file for an informal request if we put a value on it that you disagree with, or you can file for a formal appeal to be heard by an independent third party if you disagree with the value in which our office has put on the property. That is your right as a citizen of Alameda County to do so. Next question from Casey. With Prop 19, if child moves into their parents' primary residence that they gave them, is there a time period the child must occupy the home for the current assessed value to stick? 1 year. You have 1 year to file for the homeowner's exemption and move in. I think that is the questions that the staff printed out for me. I'm going to go into the Q&A now and see what questions you have, and be patient with me because this Q&A skips and jumps a lot on my screen. I think we addressed a lot of these issues already. Is anyone working on getting an extension? That's from Elizabeth Lyons. I don't know, Elizabeth. I'm working on just trying to get the information out to the public. Like I said, in order for there to be an extension, I would believe, and I could be wrong, but I would believe that would require a vote of the citizens of California. Prop 19 was decided by the citizens, and in order to change it, it would have to be a vote of the citizens to change it. Fanny had a question. That doesn't sound right. It seems it's up to staff's recording or not. What's enough time? So my recommendation to everyone is to work with title companies who do e-recording. E-recorded documents typically, usually are recorded the same day. And there are a lot of title companies that use electronic recording. It makes a lot of sense, makes it a lot easier. There's also a history of when the documents go in and are sent to the recorder's office rather than mailing it in. My suggestion is the last thing you want to do is mail in documents, right? The post office could lose the documents. Documents could get misplaced. It's not a good idea. My suggestion is electronic recording if possible. Next question, will the copy of the slides be available to attendees? We're going to post the slides on our website. I think the last slide had the website, but if you can't find the website, it's Alameda County Assessor. It's acassessor.org, and you will go to our website. We have a tab on Prop 19. There's a question here from Myra, and I'm not quite understanding it, so you may have to send a follow-up message. For how long can they keep it in order to avoid reassessment? I'm assuming you're asking if you pass a property to your child, how long do they have to live there to prevent reassessment? I don't know the answer to that. We're waiting for the state to tell us if they move out, would they lose their low assessed value? If they say you give it to your child lives there for a year, and after a year decides to rent out the house, I don't know. The state will tell us. If they don't, then I'll come up with a rule about how long they have to live there for. And like I said, I'll start asking for interested people who have an opinion on this. I'm sure a lot of you have an opinion. And I'll tell you this, each assessor, each of the 58 of us have a different opinion of it already, because we've already started talking about this. And we can't come to a consensus between the 58 of us. So each county will likely have a different rule if the state doesn't tell us. All right. Jeffrey Jordan asked, under Prop 19, the 1 year time limit, is it 1 year from the deed execution or 1 year from the recording? I treat it as 1 year from the recording. We're using the recording date as the date for everything. That's the important date to keep in mind, is the date in which everything's recorded, right? What is the child age or grandchild age requirement? There is no age requirement. It's up to you to decide what you want to pass on to your children or grandchildren and what they're ready for. It's a personal decision. I have family members that I ask all the time when they should pass on property to their children. At what age is appropriate? Well, depends on you and your child. Talk to your children about it, talk to other people about it. When is your child mature enough to take possession of a property? You have to think about, do you want to give an 18-year-old child $1 million house? I remember when I was 18, I probably would have bought a sports car if I had $1 million. That's my dad humor, for those who didn't get it. How does commercial warehouse affect by Prop 19? Does this only apply to 1 to 4 units? What happens 5 units or more, or commercial warehouse? Commercial, industrial, rental, all gets reassessed after February 16th if there's a transfer. There's a change in ownership, there's a reassessment. Doesn't matter whether it's a commercial rental or a residential rental, whether it's a fourplex or a warehouse building. It will get reassessed. There's no longer an exemption for parent-child for investment property. Oh, things are skipping here. For primary residential purposes, homeowners exemption, is it the date of the deed or the date of the recording? Date of the recording. That triggers everything. Question from Gloria. If the county has already recognized the parent-child exclusions for rental properties a couple of years ago upon the parent's death, but the transfer deeds from the parent's trust to the children's trust have not been done because the children have not signed their trust yet, does Prop 19 deadline have an impact? Yes. Get it in. That is, does the deed? Yes, get it in. We're looking at the recording date. My question from Paul. My father-in-law owns our, whoa, this is, people are typing in questions, so it's skipping around. My father-in-law owns our house in San Leandro. He lives in another house in Castro Valley. What happens if he dies after February 12th? I mean, I think you mean what happens if he dies? It depends on what his primary home is, right? You can pass your primary home to your children, and as long as they take it as their primary home, they get to keep the low property tax basis. If it is another home that's not their primary home, then it will get reassessed when it is transferred. If children are members of LLC, will the rental property be reassessed upon death of parents? It depends. Again, LLCs are a different instrument. You need to talk to your attorney about it. With LLCs, we look at change of control, right? Because most LLCs don't change ownership, they change control. And what happens is we review it to see if there's actually a change in control in the LLC, which then would trigger the reassessment under the change of ownership rules. Owner occupied triplex, we already talked about that. If they live in one and they want to use the base value transfer. If a home is in trust, death in 2019, parent-child exemption filed, property not transferred to kids. Yeah, everything has to be filed and recorded prior to February 16th if you're going to apply for a parent-child exemption under the new rules of Prop 19. If you want to use, if you want to use the rules before Prop 19. So if everything's recorded and you want to use the current rules, it has to be recorded before February 16th. If it's recorded after February 15th, then we're going to apply the new rules of Prop 19. All right, we got a couple more minutes. I have a question here about step-up basis for grandchildren. Again, go see your CPA. There are capital gains considerations that you need to look at when you are considering whether to wait for the property to be inherited or if you want to transfer sooner than death. Do the answers change depending on the county the property is located in? Yes. Like I said, if the state doesn't make up the rules, each county assessor will make up the rules, and we are each our own individuals, and we all have our own ideas of what the rules should be. So the rules I make for Alameda County may be different than the rules in Contra Costa County. All right, I think we got to most of the questions. I'm scrolling through this to see if I missed anything. But thank you everyone for being a part of this. I hope that this is helpful. I hope that you got your questions answered and that you'll be able to make some decisions for yourself and your family members. I'm going to remind all of you to seek out good legal advice, good accounting advice, good tax advice, so that way you do what is best for you and your family. Be safe. Happy holidays for those who celebrate the holidays. These slides will be posted. The email still works, so if you want to email, when those of you who got the information about this presentation, there was an email that you can send to. You can also send questions to that email, and we're going to try and create as robust a FAQ section about Prop 19 as we can, based on some of your questions. So I'm going to try and post as many of the questions as we get that I think is pertinent, and any questions that we are capable of answering, we will try and answer. Be patient, give us a little time. We have to get everything up. I'll be honest with you, I was surprised that Prop 19 passed. I thought it was not going to pass, and you know, we're all trying our best to get the information out to the public during this time of COVID. So be safe. Thank you very much. I appreciate all your time and attention to this. And we will put out another session as soon as we get more information from the state. I will do a follow-up webinar with additional information, most likely in January, as we expect to get more information from the state at that time. I will also update our website as new information comes to us. Thank you very much. Have a good day.